And if I don't win, you're going to have a depression like in 1929.
But if we don't win, I predicted you'll have a depression the likes that we had in 1929.
Trump predicts economic crisis ahead, worse than 1929. Imagine waking up one day and discovering that your life savings have lost half their value. Scary, right? This isn't just a scary story, but something that could happen in today's economic climate. Recently, Donald Trump made a bold statement, warning about an economic collapse that could be worse than the Great Depression of 1929. Why does he think this? Trump believes that if Biden remains in power, the U.S. is headed for disaster. With the national debt now at an enormous $34 trillion, Trump's warning might not just be political talk. It could be a serious economic forecast we need to consider. Trump said, "If I don't win, you're going to have a depression like in 1929.
And if I don't win, you're going to have a depression like in 1929.
Since taking office, the Biden administration has been steering the U.S. through tough economic times, leading to massive debt and rising inflation. To give you an idea, the national debt was about $27 trillion in 2020 and has now jumped to over $34 trillion, according to the U.S. Department of the Treasury. This isn't just a big number, it's a record-breaking increase of more than $7 trillion in just a few years. Besides this, inflation rates have been climbing to levels we haven't seen in decades. The U.S. Bureau of Labor Statistics reports that the current annual inflation rate is around 8.5%, the highest since the early 80s. Everyday Americans feel this impact as prices for essentials like groceries and gas go up. The impact on daily life. Every dollar in your pocket now buys less, from basic groceries to gasoline. Financial analysts from Bloomberg have pointed out that this kind of economic pressure can lead to higher loan defaults, more unemployment, and even families losing their homes. In this context, Trump's dire prediction seems less like a political move and more like a potential reality we may need to prepare for. Could we be on the verge of another major economic downturn? Current economic landscape. Have you ever felt like your money is just disappearing? That's what many Americans feel under the current administration. But how bad is the situation? You've likely noticed that everything from groceries to gas prices is going up, but the reasons behind these increases are complex. Recent reports from the U.S. Department of the Treasury show that the U.S. owes over $34 trillion. To put that in perspective, if you spent $1 million every day since Jesus was born, you still wouldn't reach that amount. In response to the economic challenges brought by the pandemic, the Federal Reserve significantly increased the money supply. Bloomberg notes that an unprecedented amount of money has been added to the economy in the last 2 years, increasing the money supply by over 40%, a rate not seen in recent history. This might seem like a quick fix, but it has long-term effects. As more money enters the market, the purchasing power of the dollar decreases, leading to inflation. Inflation, as measured by the Consumer Price Index, rose by 7% this year alone, according to the U.S. Bureau of Labor Statistics. This is the highest increase we've seen in over 40 years. For example, a $100 basket of groceries now costs $107. This may seem small, but when you apply it to all expenses, the extra costs add up quickly, significantly impacting household budgets. With rising prices, people tend to spend less, which can slow down the economy. The Wall Street Journal highlights that consumer spending is already showing signs of slowing down, with retail sales recently dropping by 1.9%. When sales drop, businesses earn less revenue, which can lead to layoffs and higher unemployment rates. Trump's critique of Biden's policies. Did you know that the U.S. was once energy independent? That's right. America didn't need to rely on anyone else for its energy needs. But those days are over. From utility bills to gas prices, let's explore what's happening and why Trump is raising the alarm. Under Trump's administration, the U.S. achieved energy independence for the first time in decades, primarily through increased oil production and fewer regulations. However, Bloomberg reports that this situation changed drastically when Biden took office. His administration pushed for a green energy agenda, including rejoining the Paris Agreement and canceling key pipeline projects like Keystone XL. What are the consequences of these actions? Reliance on oil imports has surged again. CNN reports that U.S. oil imports have increased by 40% in the past year alone, making the country more dependent on foreign oil. This shift not only affects national security, but also impacts every American's wallet. With the return to foreign oil reliance, gas prices have soared. The Wall Street Journal reported that average gas prices rose from $2.39 per gallon at the beginning of 2021 to over $3.50 by mid-2022, a nearly 50% increase in just over a year, taking more money from consumers each time they fill up their tanks. Higher energy costs affect everything, from heating homes to the cost of goods transported across the country. The Financial Times notes that these rising costs have contributed to an overall increase in living expenses, leading more Americans to struggle to make ends meet. This financial strain has also led to an increase in foreclosures, with Federal Reserve data showing a 30% rise in foreclosure filings over the past 6 months. Impact on American society. If you've ever walked into a grocery store, looked at the prices, and walked right back out or put items back on the shelf, you're not alone. Let's explore why more and more Americans are feeling the squeeze when it comes to their daily expenses. Recent data from the U.S. Department of Housing and Urban Development shows a 32% increase in foreclosure filings in the past year alone. More families are losing their homes, contributing to the growing issue of homelessness. The U.S. Bureau of Labor Statistics reports that grocery prices have risen by an average of 15% in the last year. For low-income families, this isn't just an inconvenience, it's a crisis. The cost of basics like bread, milk, and eggs has soared, forcing families to make tough choices between food, medicine, and other essentials. The economic strain extends beyond food and housing. Overall, living standards have taken a hit, affecting the quality of life for many Americans. A study by the Pew Research Center found that nearly 60% of U.S. households report serious financial stress, with savings dwindling and credit card debt climbing. This isn't just numbers on a page. It's real people struggling to afford their basic needs and altering their lifestyles to cope with the new economic realities. Trump's economic vision. What if reversing an economic downturn could start with a single decision at the top? Leadership can make or break an economy. Let's dive into Trump's vision to uplift America's economic scene. Known for his business expertise, Trump has laid out plans that he believes could not only stabilize, but also turbocharge the U.S. economy. From tax reforms to renegotiating trade deals, let's break down his strategies to understand how they might impact your wallet and our country's future. Trump's main economic pitch involves significant tax cuts. He argues that reducing taxes for businesses and individuals can stimulate economic growth by boosting spending and investment. According to Forbes, similar tax cuts in the past have sometimes led to short-term economic boosts. Trump believes a repeat could help businesses expand and create jobs. A key part of Trump's plan is bringing jobs back to American soil. His administration previously imposed tariffs on goods from countries like China to encourage companies to manufacture in the U.S. While controversial, data from the U.S. Chamber of Commerce showed a slight increase in domestic manufacturing jobs during his tenure. Trump suggests that increasing these policies could lead to more jobs and stronger economic independence. Returning to energy independence is also a high priority for Trump. He plans to roll back regulations on oil and gas production to decrease reliance on foreign energy sources. Bloomberg reports that during his previous term in office, domestic energy production peaked, which helped keep energy prices relatively low. Trump claims reinstating these policies could reduce energy costs and boost the economy. Trump also emphasizes negotiating trade deals to benefit American interests and investing heavily in infrastructure. He believes that better trade terms can protect U.S. industries, while modernizing infrastructure could lead to significant employment opportunities. The Wall Street Journal notes that targeted infrastructure projects could potentially generate thousands of jobs and attract private investment. Comparisons with historical economic crises. Did you know that before the 1929 Great Depression, stock markets were at an all-time high, much like they were just recently? It's a chilling reminder that history sometimes has a way of repeating itself. In the late 1920s, the U.S. economy appeared to be thriving. The stock market was booming, and consumer spending was at an all-time high. Fast forward to today, and until recently, our stock markets were again reaching record highs. However, according to a report by Bloomberg, like the 1929 pre-crash economy, our current economic growth relies heavily on shaky foundations like massive debt levels and speculative investments. The 1929 crash taught us that unregulated markets and excessive optimism can lead to disastrous results. The Wall Street Journal notes that prior to the 1929 crash, there was a vast expansion in credit and an investment bubble in the stock market, much like the recent boom in housing markets. Today, we see similar patterns with unprecedented levels of government and consumer debt at record highs, creating a backdrop worryingly reminiscent of the past. Economic historians, such as those at CNN, have pointed out that while there are similarities, key differences exist today, such as stronger regulatory frameworks and more responsive monetary policies, which may help mitigate some risks. However, they also warn that high levels of inequality and the increasing burden of debt could exacerbate any potential economic downturn, similar to factors that worsened the Great Depression. Globally, historical economic collapses often share common causes: high debt levels, economic disparities, and speculative investments. For example, the Japanese asset price bubble in the 1990s and the 2008 global financial crisis both offer lessons on the impacts of bursting bubbles and unmanaged debt, lessons that are still relevant today as global debt levels reach unprecedented heights. Conclusion: ignoring the potential for a severe economic downturn could lead to consequences far beyond fluctuating stock markets. Experts from Bloomberg warn that failing to address these issues could result in long-term unemployment spikes, a dramatic increase in national debt, and a decrease in global economic standing. The stakes are high, and the cost of inaction could be a scenario where recovery is not just difficult, but nearly impossible. Trump's warnings about an economic crisis worse than the 1929 depression carry weight that shouldn't be dismissed lightly. Whether one agrees with his policies or not, the underlying concerns about unsustainable debt levels and economic instability are echoed by economists and financial experts worldwide. The Wall Street Journal reports that similar economic indicators have historically preceded significant economic downturns. It's crucial for every voter and citizen to consider how political decisions impact economic security. Decisions made at the polls echo far beyond a four-year term, affecting everything from job availability to the cost of living and economic resilience. As we look to the future, it's essential to stay informed, ask tough questions, and demand that our leaders address these critical economic issues. What are your thoughts on Trump's economic warnings? What steps do you think need to be taken to avert a potential economic disaster? Your voice matters, especially as we approach future elections where these decisions will be made. Thanks for watching, and please make sure you subscribe if you enjoyed the video and watch this one as well.